And then finally, the banana zone, just so you can visualize what this means to you and your returns, and how the banana zone, how you unfuck yourself with the banana, as those NFTs say that Real Vision's produced. It's this. Things go vertical. This is the time not to lose your minds. This is the time not to FOMO in all the stupid shit your friends are making money in. This is the time to just do nothing. You should have already made your allocation. Maybe a bit of Bitcoin, a bit of Solana, a bit of ETH. Maybe you've gone out a bit the risk curve like I have, and SUI, which is one of the newer chains that's gaining massive adoption. Or maybe you're playing around a bit in memes. But remember to not fuck this up. My don't fuck this up thesis is don't use leverage. Don't FOMO into stuff. Have 90% of your assets in the core top 3 coins. And then with the 10%, you can speculate more. Whether you want to have a meme or whether you want to look at some smaller projects. Expect prices to rise from 150 to 450,000 over the course of this cycle.
Raoul Pal begins by addressing a common fear among investors, the anxiety of entering the market at its peak. Many worry they might be buying the top of the cycle, especially as Bitcoin and other major cryptocurrencies reach new highs. However, Pal argues that this cycle is far from peaking, pointing to his cycle liquidity indicator as evidence. This indicator, he explains, shows that we have yet to experience the rapid acceleration typical of past bull runs. When comparing the current cycle with previous ones, Pal believes we're tracking more closely with the 2015-2018 cycle rather than the shorter, stunted 2020 cycle. This suggests that the most explosive phase of growth, where prices could go vertical, is still ahead.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Are we anywhere near the cycle top? I know people fret, oh my God, but Bitcoin's at all-time high. Surely I'm going to be buying the top. Surely Raoul's shilling things at the top and he's trying to find exit liquidity and all the nonsense that people talk about online. Basically, our cycle liquidity indicator is nowhere near where it's going to go. Also, look at the acceleration that happens before it peaks out. We haven't done anything yet. This has been super mild. So expect the acceleration ahead. If we look at prior cycles, we're kind of nowhere in the current cycle. We're nowhere. We've still got the exciting part where prices go vertical lying ahead. It's the light blue line here that's a little bit hidden. But really what we're doing is we're more closely following, let's say, the 2015-18 cycle, which I think is how it plays out this time, as opposed to the stunted cycle of 2020. But that remains to be seen. Why this matters is crypto in the end is the best performing asset class in all recorded history. It dwarfs anything else. So Bitcoin does about 142% annualized returns. This is actually a table from Exponential Age Asset Management, my asset management firm that invests in crypto hedge funds. So we invest on behalf of high net worth individuals, pension plans, institutions, etc. And Bitcoin, Ethereum, Solana, the returns are an order of magnitude different to the next best performing asset, technology stocks, the Nasdaq. After that, you get to the S&P 500 of 13%, which barely beats that 11% hurdle rate, and nothing else beats it. The long-term returns of small caps, large caps, REITs, treasuries, nothing. They all are destroying your future wealth. So really, this is the powerful thing, the crypto supermassive black hole that outperforms everything. The Nasdaq actually is down 97.5% versus Bitcoin since 2012. 99.97% versus Bitcoin. So that's how powerful an asset crypto is. This supermassive black hole sucks in everything around it. And it happens because this is all about a technology that is growing. So this is a chart of the number of users of crypto by using wallet addresses versus internet users from 1992, when the internet was at 5 million and we started wallets from 5 million. Now, internet users is IP addresses. We've all got many IP addresses. Crypto wallets Well, they're wallets. They're not necessarily daily active users, and we've all got several wallets. So it's comparing a similar like for like. But currently, crypto has been growing at twice the speed of the internet. Now, on this chart, we assume the internet actually slowed down in year 8, 9, and 10. So we've assumed the same rate of growth as the internet, not a doubling of growth. If it was a doubling of growth, it's probably growing at 80% a year, which I think is more likely. But we slowed it down, and we get to 1.1 billion wallets, or users, in inverted commas, by the end of 2025. 1.1 billion. Okay, that's huge. But it's not as huge as if we extrapolate out to 2030, that fabled date where I think we've got 6 years to unfuck our future and invest before things change. At that point, crypto starts to become quite saturated in terms of its growth, because suddenly you're at 4 billion users and we can only double in growth to 8 billion users. Yes, on-chain activity will grow and that will drive more metrics and still drive prices, but generally the bulk of the returns happens between now and 2030, which is why I'm so anxious for everybody to make sure that they unfuck their futures doing this. It's a huge thing. And that's what's driving this beautiful log trend Bitcoin. Over time, number go up because people use blockchain technology because the world is more digital than today. And we've barely started the rise. We usually get to 2 standard deviations overboard. Will we get that far or not? I don't know. If it's 2 standard deviations, we're talking $500,000. That sounds a bit too racy to me. Maybe it gets to 1 standard deviation because each cycle is a little more muted than the past. Either way, expect prices to rise from 150 to 450,000 over the course of this cycle, depending how it pans out. Again, no guarantees here, but just to give you an order of magnitude, and filming this today, we're at 75,000. Okay, got it. And then finally, the banana zone, just so you can visualize what this means to you and your returns, and how the banana zone, how you unfuck yourself with the banana, as those NFTs say that Real Vision's produced, is this. Things go vertical. This is the time not to lose your minds. This is the time not to FOMO in all the stupid shit your friends are making money in. This is the time to just do nothing. You should have already made your allocation. Maybe a bit of Bitcoin, a bit of Solana, a bit of ETH. Maybe you've gone out a bit the risk curve like I have, and Sui, which is one of the newer chains that's gaining massive adoption. Or maybe you're playing around a bit in memes. But remember, to not fuck this up, my don't fuck this up thesis is don't use leverage. Don't FOMO into stuff. Have 90% of your assets in the core top 3 coins. And then with the 10%, you can speculate more, whether you want to have a meme or whether you want to look at some smaller projects. So that's how I like to think about it. That way, you generally won't fuck it up. It's by over trading, trying to trade breakouts, using leverage. Don't use leverage, please. Because what happens is you get it wrong and you lose your coins. We have one job here. One job in a secular megatrend like this is not to lose control of your coins. That means don't fuck around too much in DeFi. Don't give your coins to anybody. Just do nothing. Use that 10% if you want to feed your inner DJ, or you want to learn new things and how things work, but don't do it with your full stack.
Pal's metaphor of the banana zone refers to the period of rapid price appreciation in crypto markets, a time when assets can go vertical and achieve exponential growth. However, he cautions against getting swept up in hype during this phase, emphasizing the importance of sticking to a strategy and avoiding impulsive decisions. During the banana zone, Pal suggests that investors maintain their positions, avoid high-risk investments, and refrain from overextending. He advises against engaging in complex DeFi activities that could jeopardize core holdings, especially for those unfamiliar with the technology. For those looking to participate in the banana zone, Pal highlights the importance of securing one's core stack of assets, with only a small allocation reserved for speculative bets. He explains that staying the course without succumbing to FOMO, leverage, or overtrading is the best way to capitalize on the immense potential ahead.
Remember that magic formula that I've talked about in the past, where GDP growth equals population growth plus productivity growth plus debt growth. Okay, got that? Well, this is the important bit. The labor force participation rate in black here has been falling for a couple of decades. That is because the population is beginning to age. and so less people are in the workforce. Now, you can see in pink, it's the births-deaths rate that is actually driving this. So as population growth has been slowing, the workforce slows over time as people get older. Okay, so that's pretty clear. An old population, however, because of the magic formula, less people in the workforce means less GDP. So trend rate of GDP has been slowing. So the economy's been slowing over time. This chart is a chart you'll never see anywhere else, and I think it's the single most important chart in all of global macro. So what is it? It's that same labor force participation rate, but this time it's against US government debt as a percentage of GDP. Now it's inverted here, and what it basically tells you is that as the labor force declines in size, or percentage of people involved in the labor force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I talked about before. This chart is incredibly important. Now, look at the little divergence recently where government debt has been growing, but the labor force participation rate hasn't. That's the recent influx in immigration in the United States over the last 2 years, where some 6 million people or so have immigrated into the US, and that has kept the labor force participation rate higher, offsetting the retirees. But that's unlikely to continue, particularly with the new government. So what we'll see is the labor force participation rate decline and government debts keep growing. Okay, so we've got all of these massive debts. I've talked to you about the everything code. The everything code is the servicing of these debts by using liquidity. So liquidity is the debasement of currency. To service these debts, they print more money to service them. It's as simple as that. That is the game we're in. That is the everything code game, where I journey to that nexus of understanding between macro, crypto, and the exponential age of technology. Now, this is a special. It's a flash update for you all, because I know that you're all interested in that special yellow fruit, the banana, for the banana zone. The banana zone is that point when crypto prices go exponential. And while we all love this and our hopes and dreams are all in that yellow fruit, I wanted to get everybody on the same page of understanding so you know where we are and why we're here. So I'm going to run through a selection of charts, many of which you'll never seen before, that gives you a much deeper understanding of what's going on and what we might be able to look forward to ahead. Because the banana zone is a very special time. Now, if you haven't summoned the banana by getting your merch, click on the link below.
Raoul Pal presents a compelling argument for why the crypto market is still in its early stages of growth. His insights offer a roadmap for investors seeking to benefit from the upcoming bull market while maintaining a disciplined approach. According to Pal, by understanding the broader economic trends, focusing on core assets, and resisting the urge to chase speculative gains, investors can prepare to capitalize on crypto's continued expansion. Whether you're a seasoned investor or new to the world of digital assets, Pal's guidance offers valuable insights for navigating this dynamic market. As we look to the future, it's clear that crypto is more than just an asset class. It's part of a paradigm shift that will reshape finance, technology, and global economics for years to come.
Please like and subscribe my channel.